Um, if your business is not profitable, if the financial institution give you money, how can they recoup their money back, right? So that's another very important thing. Although we are not only looking at the profitability, we're looking at the service coverage model. But the profitability, and the trend are extremely important to us. A lot of businesses are seasonal, especially in New England, the travel industry, right? Yeah, January, no one comes. Yeah, the hotel price goes to 300. By the time you go to May, everything's 1,200 a night. So here is the swing. How can you balance those things in your cash flow model and then build up cash flow? When the 1,200 nights comes in, and you can't just spend all of that. You have to strategically balance it out for those rainy days, for those slow days. Do you need to build a credit? Credit is a journey. Credit is a journey. When I first came to the state, I don't have any credit. The school was nice enough to give me a credit card for $500. That's where my journey starts. I don't know why they believe me, but they gave me $500. I used it carefully and I paid it back every time. So throughout the years, I built my credit. So does the business. So there's a business credit bureau that when you register the business, when you have the EIN, you need to go and register. The information is captured in a combination what you input and then what they can capture from the data. These are done at Bradstreet, Equifax, and Experian. Anybody heard of those three things?
Yep.
A building, or buy an office, or buy a heavy duty equipment, or you buy some computer software, whatever it is, you gotta have a reason behind it. The bankers always ask, right? What is money for? That's what you need to tell them. What is a borrowing need for? And then you can look at it. Is this piece of new acquisition gonna really, really increase profitability and help you make profit at the short term and the longer run? Not because it's on sale you want to buy it. It's because that really impact the business. Think strategic. That's why we talk about strategic. Business is your baby. That is your baby. Then you have to hold it and put a lot of thoughts into it. So the credit has a lot of meanings. And what we're referring is basically is agreement and a contract between the borrower and the lender here. Tomorrow, I'm gonna send the entrepreneur team an email about the workbook here. You have the outline of what we talked about today, and then on this page, you'll be able to look at your big picture, your goal, and in terms of borrowing, in relationship to the borrowing. Do you need to borrow, whether it's in 6 months, 12 months, 24 months? What is your borrowing landscape look like and forecast? Why are you a good investment? This is a no question about it. You are the idea, you are the founder, you are the full engine, and you build up a team. You are the salesperson, you are the customer care person, you are everything. So you better invest in yourself. When the banker comes in, there's an old saying of 5 C's of a credit. Here we talk about the 3 major things. Leadership, basically it's a character. So you are the person and everyone comes to work for you or surrounding you, right? It's because of you. Whether it's a complementary to what your skills, ideas, or it is a facilitator of your ideas and your mission, it's all because of you. And you assemble leadership. And then that person could be a complementary to your skills. And some of them can be executed. Let's say if you're a thinker, then you need to hire some executors. And If you are artistic person, then you really need someone who's logical and good at accounting, right? So you are assembling a team. The leadership really comes down to whether can they support the expansion and borrowing need that you go to next. For example, accounting team. With the more you borrow, the requirement for the accounting paperwork will increase. Is your team ready or capable or willing even to handle the work that comes down? With this equipment buying or another piece of business acquiring, is your sales team or customer care team or tech team ready to back up this purchase? So there's a lot of things into the leadership. You as a leader, you have to be 100% or 120% sure about this action. Cash flow. Cash flow is important. We have talked about cash flow all along, right? When you buy it, once the deal signed, closed, 30 days later, the payment comes in. Are you ready for that? I would say that no person is 100% ready. I was never 100% ready for what I'm signing on. But at least in your heart, you have the grit to be 100% ready for that comes up. Collateral. Most of the loans have a collateral, whether it's accounts receivables, or whether it's fixed assets, or whether it's equity exchange, or whatever. They always have a collateral in exchange. That's the second source of repayment financial institution are looking for. We talked about a personal credit score and business credit score. Be very honest and open. At the beginning, when you are very, very small starting business, first 6 months, a year, the financial institution relies a lot on your personal credit score to build your business. And I should say this is the right thing to do. Because if you don't believe it, and then you sabotage your own personal credit, how can someone to believe that you're gonna save the business credit, right? And we use personal credit to help you build the business credit score. And I strongly recommend you to sign up for those credit bureau to build up your business credit score as soon as you start operating the business. EIN number. Then the next piece we're going to talk about financial data. That's important. Bankers know what they only look at the numbers. They do look a lot of numbers. So is there something that you can prepare ahead of time? Because if you know, you just strategically planning your cash flow and thinking about buying this in 2 years, what's some of the things that you can do today? So when you get ready to borrow and acquire this new business or equipment, you can talk to a banker very much prepared, and they cannot say no to you. Tax returns. Tax returns are important. I always say tax is cost of doing business as well. Be wise and strategically talking to your CPAs. Balance sheet, that tells me a lot of things. It checks from what you owe, what you own, and what you believe in yourself in the equity piece of it. Have you taken everything distributed out? How quickly you can turn your AR into cash? Or how leveraged you are? Did you borrow a lot of money? So a lot of business when they start beginning, they use friends and family resources. So I'm there, and when we started talking, they go, oh, I never borrow any money from anybody. But when you look at a balance sheet, oops, there's $250,000 from friends and family 5 years ago. But that goes to your liability. Are you going to sacrifice to put it into the equity and sacrifice the equity for them? Hey, that's a strategy you have to come up and think about it before you move forward. Right now, I'm working with someone that they have 43 stores. at first 8 stores, they use friends and family money. They are talking to PEs to raise funds for the next 40 stores. So shall they pay these 8 store owners buyout now with the price today? Or alternatively, they can pay a premium after closing the deal. So that's a strategy they have to think through. The balance sheet has a lot to tell. Profit and loss, we talk about profitability. We look at the trend. 2020 was a year no one cares. But 2021, have they gone back to 2019? How does the future hold for you? How these past years look like? And if there's a dip or there's a spike, what was the reason behind it? What is your gross profit? What is your net profit? What is your expenses? What is payroll expenses? Consist of the entire expenses. What are some the fixed expenses like rentals and other things? What's the cost of that? So they'll tell me a lot, whether that is aligned with industry general or you're actually entering a very good deal with your vendors. We know a lot through here. So in conclusion on the financial statement is, if you think about the borrowing, I would advise you talk to your CPA, your bankers, your relationship managers early enough to understand what you need to do, what you need to prepare, and then get ready for your next job. What are some of the credit options? A lot. We just touched base on it. Clara was talking about equity diluted funding. But I will start with some very simple ones. A credit card. The minute you have a EIN number, and you're ready to log in to Experian, Dun & Bradstreet, make sure you get a business credit card and pay it regularly. And then one, you can separate business expenses from your personal expenses. The most important thing is build up a business credit. Your business credit score, when you're ready to expand, will go high, much higher. Line of credit, that's sort of like another revolver of a credit card with a little bit of different terms and conditioning to it. After COVID, with all the data, fintech, and all things included, we are making it very, very easy. So right now, we can get a decision within 24 to 48 hours for a working capital line of credit. For minorities, we can even lower some of the criteria and make a favorable decision for diverse entrepreneurs. Banking financial industry is doing things. Not only our bank, other banks are doing the same thing to help support diverse entrepreneurs to get the cash result that we're talking about 3 to 6 months rather than 27 days. Terminal, there's a lot of different terminals. Everyone is different based on the collateral, whether it's real estate, piece of equipment, or computers, or even acquiring a new business. That's very, very different. The term, the conditions, the rate, we can specify, talk about the individual case when we comes to it. And then we use some bankers here. Every bank is a little different. CDFI loans. I think CDFI loan is a very good tool where you start. They underwrite the loans based on projections. It's small, it's a little more expensive, but for the right people, this is a right product. They existed for many, many years, and there's a reason for it. Venture capital. This is the innovation town. I think everyone's on the venture journey. I think everyone is on the venture journey. And there's pros and cons. The when and the who, I think is the most important when you're talking about venture debt. when you're gonna bring them on, and who is your partner. You look at for more than just the money. It's a partnership, it's a resources, it's a people, it's a name behind that venture is more important than just the money. Business grants, I had a lot of them. Just to have to, it's a lot of writing, and then you will find it adequate for almost every large organizations have some sort of small grants out there for startups. So I'm gonna pause here and see